Good day. My name is Mark Woodworth. I am the president of PKF Hospitality Research, and thank you for taking a few moments out of your day to join us for this version of Hotel Horizons Update. It's a Friday afternoon in early January 2012 here in Atlanta, Georgia. A great day, and part of what makes it a great day is I'm joined once again by my good friend and colleague, Jack Corgel. Jack, thanks for being here.
Wonderful to be
with
here.
us back in town. About a month ago now, we did release to our clients and subscribers the December to February edition of Hotel Horizons. In that report, we called for a domestic RevPAR increase of 8.1% for 2011 and an estimate of 6.1% growth for 2012. As we show here, that lift for 2012, importantly, is going to be driven mostly by an increase in average daily rate. That stronger rate growth will lead to very, very attractive year-over-year increases in bottom line NOI for the typical U.S. hotel. Having said that, and we feel very good and remain very positive about growth prospects for 2012, there's no question, Jack, that there's a lot of things on people's minds that make one something less than totally comfortable and certain about where we're headed. And I'd love to get your take on just kind of where your head is at today and how you see 2012 playing out for the industry.
Sure, Mark. Thanks. Like everybody else, I have a list, 5 top reasons why I'm very optimistic about 2012 with respect to hotel performance, financial performance. First of these is the travelers have the money, and I'm taking the perspective of travelers here. Moody's Analytics, which we subscribe to for our macroeconomic forecasts, puts real personal income growth rate at 3.6% for 2012, and that's a pretty healthy number when you think of it in real terms. Also, corporate profits continue to surprise people with their accelerated growth rates, maybe with the exception of Kodak and Best Buy. So the first of my reasons for optimism is travelers have the money. The second is travelers.
Well, I guess let me add to that too.
Sure.
Certainly, just what I'm hearing anecdotally and talking to operators, managers from around the country, is in fact their customers do have the money, and then fortunately they're spending it on hotels, and it supports this notion of we have seen good rate growth last year and likely to see more of the same in 2012.
Sure, and that's the logical extension. They're probably going to be able to pay higher room rate. Right. The second of my reasons for optimism is that travelers are increasingly more confident going into 2012. Certainly with the positive job numbers that we've received over the last 2 weeks, people have to be feeling much more confident about continuing to be employed with their current employer. And certainly from their personal security perspective, they must be feeling more comfortable as well. So confidence, and I think you see confidence in the market.
Yeah, and as
as
I
well.
say, I think that and as you taught me a long time ago now, that there's a limited amount of weight one can put in confidence indexes and so forth. Having said that, the indexes have certainly been moving in a positive direction. But again, I look back at it, and most importantly, it's showing up in the hotel numbers.
Right. The third reason why I'm very confident about 2012 is we have continued low supply growth. So travelers have fewer new options than they've had during the last recovery. And so because of this 0.5% or so supply growth we see in 2012, hotels are going to get a financial lift from those they're in the ground now. In fact, 0.5% is hardly enough to replace the existing supply that's being removed from the surface.
And I agree with that. Obviously, there's a few less than a handful exceptions to that, i.e. New York City has a lot of new rooms coming in 2012. But again, that's truly the exception, not the rule. So is there a number 4?
Number 4 is that the growth in 2012, like it's been in 2011, is going to be well dispersed. Looking at the most recent Smith Travel releases for the month of November, 21 out of the top 25 markets had very positive room rate growth and very positive room sales. So then we look at just today we got the December numbers on a preliminary basis from Smith Travel. All of the chain scale segments showed very, very strong growth. The worst of which was in the 3 to 5% range. The best was in the 7 to 8% range.
So again, all very positive. So is there a fifth and final?
The last
reason?
one is travelers like the U.S. The growth rate in international travel to the United States from 2010 to 2011 has been about 5.4%. Now, with that increase, it takes us over the peak that we saw in 2007. So more travelers are coming from outside the U.S. in 2011, and we expect that trend to continue through 2012.
Well, it makes a lot of sense to me, and I'm having a hard time arguing with you, Jack, as usual. Jack and I are going to be in Los Angeles at the ALICE conference towards the end of this month. We hope you're there, and if you are there and see us, track us down. We'd love to get your take on these thoughts and other insights that you might have into where we're headed. So, Jack, thanks again to you for your time, and thank you for taking some part of your day to spend some time and hear of our current thinking. Good luck in 2012.